Yo, Gem fam, welcome back to the channel. Welcome back to DroppingGemsFX. You already know my main goal is to lace you guys up with advice and tips on how to take your Forex trading journey to the next level and to bring you guys along my Forex trading journey as well. Now in this video, I'm going to throw it back to the educational videos I started this channel with. You know, that was one of the legs that I stand on for making this channel, right? One for giving you guys advice on how to elevate your trading and basically teaching you guys from the ground up, as well as taking you guys along my Forex trading journey and letting you guys learn that way as well. So in today's video, we're going to be talking about order entries, right? There's 5 different types of order entries you can get into the market with, get involved in the Forex market with, and I'm going to be going through each and every one of them, explaining them. I'm going to also give you examples to illustrate what I'm talking about, as well as give you examples on the charts as well with the candlesticks, so you guys can really get this down packed. This is a topic that has confused a lot of traders and even myself too. 4 out of the 5 order entries, you know, I almost never touched because I didn't fully understand how they worked, right? And so I think this is essential for everybody to understand. So if you rock with the video, if you rock with me, if you rock with the channel, if you rock with what I'm doing, drop a like, subscribe, comment down below dropping gems FX for life. So I know that you guys are real, so I know that you guys are listening and you've watched at least this far, you know what I'm saying? And without further ado, I'm gonna get right into the video. Alright guys, now that you're back, you already know what we're about to be on. Trading View, obviously, and these are the 5 order entries, right? So I'm going to be showing you basically how this also works in MT4 on your phone. I unfortunately do not use MT4 on a computer, and I do not use the brokers on TradingView, so I won't be able to explain how that works, but definitely I got you with the phone, right? So market execution is going to be the first order type, and it's going to be the order type that maybe most people use most often, right? So the way market execution works, the moment that you go on your MT4 account, right, and you pick a pair, you pick your lot size, you set your stop loss, you set your take profit, and you hit that buy or sell button, you are in the market. It's as simple as that and self-explanatory, right? Market execution, right? Okay. The next order type is going to be buy stop, okay? So this happens when you set the trade to activate at a given price greater than the price at a given point. I'll explain it. I know it may sound a little bit confusing. So when price surpasses that price you set, you'll be entered into the market, okay? So I have an illustration right here on the right you guys can take a look at, right? So the yellow dot or squiggly line, right, represents the point in time of where price is right now, right? So if we look all the way to the right, price is at 1.9234, right? 1.9234. So when you place your buy stop, you have to place, you have to set a price above where price is at a given time. So I cannot put a buy stop right here at this point. I can put it up here. I can put it way up here. But for the sake of this illustration, we're going to say that we set the buy stop at this line right here, this horizontal ray that I have going on right here at 1.39632, right? So we set it here, price is here, and eventually, whether it takes an hour, whether it takes a day, whether it takes 3 days, you see price coming up and hitting your buy stop. The moment that price breaches this point, you are in the market, right? So as I mentioned before, it can take 5 minutes, it can take 10 minutes, it doesn't really matter. You can also set for the next 4 order types, right? You can also set a kind of time period, time constraint for this to happen, where you say, okay, here's my buy stop, sell stop, buy limit, sell limit. If this is not triggered within the next 2 days, 3 days, 2 hours, whatever the case may be, the order deletes, right, from the trading platform. So I'm not really sure if you can do that on the computer. I'm sure you can, but I have no experience with that, so I can't talk about that, right? So that's a buy stop, right? You set a price above where price is right now, right? When price comes and surpasses that price point, then you are in the market, not before. And you know what I'm saying? That's the case, right? So the sell stop is the opposite thing. So you want to flip that, right? So it is when you set the trade to activate at a given price lower than where price is at that point, right? When price goes and dips below that, you will be in the market, okay? So the illustration I have right here, price is here. You can see that our stop loss is down here at 138, right? But we're not in the market because price did not surpass this, right? Only when price came ahead and made a little correction to the upside before melting down is when we are in the market, okay? Really simple, really easy. I think these three on the left are kind of straightforward for most people. It's the two on the right that kind of causes some confusion, okay? So let me go ahead and try to explain that the best I can for you guys. Okay, so the first one is going to be a buy limit, right? So a buy limit happens when you set the trade to activate at a given price lower than the price at a given point. And I know this may confuse you because of what we just talked about on the left, but try to kind of put that to the side right now. We're focusing on buy limit, right? So at a given price lower than where price is right now. So price then needs to come down and trigger your price point for you to be entered into the market, okay? So what does that look like? Okay, so price is here. Oh, give me a second. TradingView is acting up. Price is here, right, at 1.4 flat, okay? We're going to set our buy limit down here, whether it be to come and retest an area of consolidation, support, whatever the case may be, a breakout. This is where you set your buy limit. When price comes down and triggers it, right, has to surpass it, that's when you are entered into the market. Now, obviously, it's a buy, it's a long, right? So when price comes above there, that's when you're starting to make profit, okay? That's when you're starting to make profit, right? So you're setting price, you're setting the buy limit below where price is right now in the hopes that price will come down, trigger your order, and then go ahead and shoot up in the direction that you want it to, okay? I hope that's really, really simple and easy to understand. And if it's not, go ahead and pause the video, rewind, and you know what I'm saying? Do what you got to do, right? So we're going to take that same concept and again, flip it around for a sell limit, right? So a sell limit is when you set the trade to activate at a given price greater than the price at a given point. I know this is confusing. Bear with me. So price then needs to come up and trigger your price point for you to be entered into the market, okay? Again, similar to the scenarios you would use a buy limit in, it may be to come and retest resistance, maybe to come and retest a breakout of a pattern, maybe to come and retest consolidation, right? That is when you would use this order type, right? So price is here at 137, right? Let's say 137 flat, even though it's not, obviously, right? So price, we're not in the market right now, right? Our sell limit is up here at a resistance level. So we are going to need this to push up, trigger our sell limit, and then fall back into profit, right? Trigger our sell limit here at this point in time, and then fall back into profit, all right? Now, I hope that's pretty simple and easy for you guys. And what I'm going to do is I'm going to show you guys how this works on a chart, right? So we are on GBP USD on the 1 hour time frame, okay? So I'm going to illustrate buy stop first, then sell stop, then buy limit, and sell limit, as we did over on the right, okay? So let me go ahead and rewind all of this, okay? Okay, so you see, you have whatever type of analysis in the past, but let's say, for hypothetical reasons, you know that price is going to go ahead and fill this area over here, right? You know that price is going to go over here and you want to take a long, but you don't want to do market execution, right? You want to wait until price maybe passes this little, what is that? Resistance area. And then you want to be triggered into the market with the momentum, right? So what would you do? You would set your buy stop. You would set your buy stop here, right? Okay. And at this point in time, you are not in the market, right? You just set the buy stop. Maybe this is right before you go to sleep. Maybe this is before you make your commute to your 9 to 5. Maybe this is before you have a big presentation. You cannot be sitting on the charts waiting for this to happen, right? This is where you would set a buy stop. Boom. Right? You're still, wait, let me go back. At this point, you are still not in the market, right? You're still not in the market. You're still not in the market, right? Price wicked, but it's still not triggering your buy stop, right? On this candlestick, you obviously would have been in the market and you would have been in some drawdown. If you saw real quick, there was a wick to the top, but ultimately it was a bearish candlestick before it again, price rose, okay? So that is a buy stop. And then obviously, boom, price goes ahead and takes you out at your TP. And it's a great, great day, okay? It's a great, great day. All right? So let's do this. Just move this over to the side, right? And let's just say that this is a sell stop, okay? So now you're saying that when price goes ahead and gets to this key area, you expect for price to sell. Why? Well, maybe because, it's going to be the right shoulder to this head and shoulder pattern. Maybe it's because, it hit the golden zone, whatever the case may be. This is why you want to set a sell stop. And you have a presentation, you have a commute to work, you just can't be on the charts, you can't be on your phone. But the sell stop helps you be in the market without you physically having to be there, okay? So price goes ahead, does what it does. Let me speed this up a little bit. Boom, right? You are in the market. You get the point, right? You're in the market from this candlestick that just triggered your sell stop. Obviously, you have some drawdown. And obviously, this scenario is not taking into account stop loss and, exactly where you want to get into the market. But the point is that the candle triggered your stop loss. Your sell stop, and then went ahead and put you into profit, right? Eventually put you into profit, okay? Now, let's do a little bit of a more complicated buy limit, okay? So we see that price is rejecting from the zone, right? Maybe it might come down and form the right shoulder to a head and shoulders pattern. Maybe it might come down to this level, right? And let's just pick a scenario where, okay, so it eventually melts. Let's just pick a scenario where we get our buy stop triggered. Okay, let's do right here. All right. Okay, so price is, let me take this all away, get this clean for you guys. So price is melting from this zone. We already understand that, a couple times before, 1, 2, 3, 4 times before, price is melted from the zone, came back and touched this. So we want to set a buy limit so that when price comes to this point, right? When price comes to this point, it can trigger us for a long, and we can net profits by going back to the zone, right? Boom. Let's do it. right? So price is above. Price is above. We set our buy limit below, okay? We set our buy limit below, right? When price comes down and triggers our buy limit, this is when we are now in the market for long and we are in profits, okay? So we had a nice little wick trigger. This is exactly what you want to happen. And then price just immediately bounces back up. You know, you take it to whatever level you want it to take, and you know, you run away with your profits, okay? So price was here. We set the buy limit below price. Price then came down however many hours later, triggered us into the market, and now we are in profits, okay? That's a buy limit, okay? Now let's go for a sell limit. Now I'm assuming that price is going to fumble somewhere around here, so let's just say price is at 3.9 right now, okay? For a sell limit, we have to set the price above, right? Above where price is at a given point, and then wait for it to trigger us into the market, okay? So now, come on, trigger. Okay, boom. We have another wick that triggered us into the market. It came up, and now we're into profit with the very next candlestick, okay? And then obviously, you know, whether it melts or not, you know what I'm saying? You take profit wherever you want to take profit, okay? Boom, that's it. That is a sell limit, right? So these are the 5 order types. I'll go over them once more, right? We have market execution. That's when you sit there and place the trade on your phone. Buy stop, sell stop. The price needs to crash through that price point, right, to trigger you into the market. Buy limit, we're setting price below where price is right now, waiting for price to melt, trigger us, and then buy. Sell limit, we're setting the price above current price. We're waiting for price to buy and then melt, putting us into profit, okay? So guys, I hope this was pretty simple and pretty easy for you to understand. If you like these types of educational videos, I definitely want to keep doing more along with anything else I encounter on my trading journey. But leave a like, comment down below, like I said, dropping gems FX for life, so I know that you're real and I know that you rock with me. And I'll catch you guys in the next one, man.